The US dollar has fallen to its lowest level since April 2022 versus its major peers, but could it have further to fall? And with geopolitical concerns easing, what will be the new focus for the markets? To answer these questions and more, I'm joined by Global Head of Retail Dealing, Alex Ridges. Thank you for joining us.
Hi, Fiona.
So the euro US dollar has passed 117. US dollar Japanese yen is down $4 from Monday's high. What's driving this US dollar weakness?
Well, we've seen the new sort of dovish focus towards US interest rates. So overnight, huge news that Trump is potentially going to announce the successor to the Fed chair, Jerome Powell, as soon as September. So, while he's not actually going out the door yet, as soon as that happens, it completely undermines that hawkish focus of the Fed. And so markets have been like, well, okay, that's first of all really positive all round, and less reason to hold the dollar.
And are we going to see a renewed correlation between interest rates and indices, do you think?
Well, I almost feel that this has been brewing for a while. While the news is out yesterday, often the markets sort of predate the news, and so I think this is almost the last phase that we've seen, and has been that idea of we're definitely now going to see lower rates. So the markets have really reacted to that, and what we've seen all year, I think what used to be sort of 6-month, yearly, even multi-year sort of phases in what markets are doing. I think we're in that phase of, again, the sort of high correlation between lower interest rates and rallying indices. I think if we go back at the start of the year, we had China can do AI better than America. The crash there. Then obviously we had the tariffs. Then we had the no tariffs. Then we've had the Iran war. All these sort of phases where market correlations really broke down. And at the moment, again, we're sort of, in a way, sort of getting back to normality.
And how does this play out for retail traders then?
Well, what as I said, with all these phases we've seen this year, we've had no period where almost investors can relax a bit. There's almost like there's been so many constraints, and I think almost caution causes markets to almost stay where they are, because uncertainty means don't do anything. And for retail traders, normally, what we see is this is normally a gold mine where markets are sort of oscillating. Market goes up, clients sell, market goes down, clients buy, and they do very, very well. But there's almost that bit of caution for retail traders now. The constraints are off. It's almost like being locked in a shed, and now you're out in the middle of a field. Where is the limit? As you were saying, euro dollars at sort of multiple couple of years high at 117, and cables up above 137, and the average investor, you're like, well, that's gone too far. But when you step back and look where things have been in the past, 5, 10, forget 2008. Euro was at 160. So when you put it in that context, it's almost, I'm sort of saying it's one of caution. These markets could go a long way because there are no boundaries at the moment.
And so with a lot of those issues that have been holding back the markets out of the way, have we got a new growth story, do you think?
Well, I was looking into, again, commodities. Is there going to be another commodities super cycle, i.e. money's cheaper, there's going to be more investment to go into sort of manufacturing industry. And Goldman's are talking about copper again having a sort of a mini boom. But when I've sort of delved into these things, to look for this, copper's a bit of a short-term play because lots of importers have been sort of buying up copper before tariffs get underway. So that doesn't seem like a long-term thing. We quote iron ore on the daily exchange out to our retail clients, and again looking at that, that's at 9-month lows. So there's nothing, and aluminium as well is sort of in the middle of a range. So there's nothing I really see sort of on the industrial front to say, well, there might be cheap money pushing markets higher, but it's not a sort of growth-led industrial story.
Okay, and what do you see as the next phase?
Well, the next phase is almost I see as sort of as a previous phase. We've seen, I think as of yesterday, Nvidia's back to being the biggest company in the world again. It's overtaken Microsoft again. So I almost see it as it's the AI play again. We had AI, we had doubts, and this is almost like the second wave of it. For me, it's fascinating how Apple was always the sort of golden child of sort of consumerism and growth. And that's really struggled. The last 6 months, the stock performance has been terrible, and just purely because its AI isn't good enough. So I think the next wave again is going to be almost that focus back on individual equities, And if you haven't got the best AI in your portfolio, it's going to struggle.
Excellent. Well, thank you very much for your analysis, Alex. For more videos like this, please do like and subscribe.